Welcome back to the Wealth Builder podcast. My name's Nick Donato and I'm a financial advisor at Guidance Financial. Today we will again be joined by James Brannan from BlockByte Capital to delve a bit deeper into cryptocurrency and digital assets. We are going to look over what's coming next for these assets, give you a bit of an outlook on the sector. We're going to chat about the busts, the risks involved, and the red flags to look at when it comes to these assets. And then at the end of the podcast, we'll have a bit of fun to chat about meme coins, Trump coin, Caitlyn Jenner, and the likes. So thanks again for joining me today, James. It's good to have you back.
Pleasure to be back, Nick.
So today, delving a bit deeper, a couple of weeks ago we did Crypto 101, so to speak. Today we'll have a bit more of a deeper conversation around opportunities and, you know, all things digital assets. One thing that, people have, society has, is a bit of a fear of missing out, jumping on the train too late. So have we missed the train on digital assets?
Yes, and so yeah, sorry about that. It's done. No, I think it's always a bit of a tricky question because when you ask, a crypto business, crypto brokers, generally the answer you're going to expect is, "Oh no, it's never too late. Jump into the market." Um, there's partial truth to that, but taking a step back, we did some research at BlockByte looking at what is the landscape of total financial assets in the world today. And you've got buckets like real estate, which is a $500 trillion asset class. You've got bonds, which is like 300 trillion, equities, similar size, collectibles, gold, and commodities, which are booming right now. And digital assets, in terms of a storehold of wealth, are only a $5 trillion market today. And that's about 0.4% of the total financial asset market. And so whilst, we've seen the market grow significantly over the last 5 years, our personal perspective is that we see this going to certainly more than 1 or 2% of global financial assets, just as more capital, institutional capital, moves onto blockchains. So we don't think it's too late at all when you take a look at where things are going and have been trending.
Not too late to get into to get some value if you want. But given where, again, I always go back to Bitcoin because it's the one
Hmm.
that's the most well known and rolls off the tongue. But given Bitcoin and where it's trading at quite high, it has been for a while, I guess, would there be any value in that?
My
Limited
personal
capacity as well. Sorry for cutting you off.
No, no. So you're right. So Bitcoin is around 60% of that $5 trillion market. And it's, currently it's around the 90,000 US dollar per coin mark. When this episode gets released, we could be a bit higher, a bit lower, I don't know. But we actually see Bitcoin over the next decade to 15 years going into the hundreds of thousands. Now, of course, not financial advice, do your own research. But the reason we think that there's significant room to run in Bitcoin specifically is that we've got an ever expanding supply of currency. So whether it's the US dollar or the Australian dollar, we did some research recently, and it showed that according to the RBA's own data, the Australian dollar has been expanding at around 8.6% per year. And when I say expanding, I mean the amount of new dollars into the Australian economy. I think it's slightly less, around 7% over the last 20 years, that the US dollar is increasing in terms of supply. And the demand for a neutral store of value is, in our view, only going to increase. And we can see that already in commodities. So gold and silver typically lead moves that we've seen in the digital asset market. And the reason those assets are actually skyrocketing right now, I think I just checked and the price of gold's approaching 5,500 US dollars an ounce. Silver's going through the roof as well, is countries are moving away from holding US treasuries, holding the US dollar. They've got a $38 trillion debt problem that they are unable to solve. They're running $2 trillion plus annual deficits. And so Bitcoin being the largest, most decentralized digital asset has got this appeal to countries, to individuals, to institutions as a scarce store of value. So we actually think there's, even with Bitcoin at the current price, could go significantly higher.
The political unrest or all of the things going on in the US and everywhere else seems to be, yeah, shooting the lights out for the golds and the silvers of the world. So potentially likening it to those types of assets, which is, yeah, interesting. But taking a step away from Bitcoin, and I always focus on Bitcoin because it's the one that is most common. But taking a step away from Bitcoin, keeping in mind we are recording at the end of January, looking forward in the next 12 months, what's the outlook on the digital asset sector? I guess there's
Yeah,
all the
so
wealth that's floating around. So yeah.
our outlook over the next 12 months is it's bullish but volatile. And I never generally like looking at things over 12 months because in investing, as we know, like 12 months, Trump could do one thing or another and enforce some tariff or the economy goes sideways or down. Um, but where do we see going over the next 12 months? We like to look back at the last couple of years. So the main theme at the moment in digital assets has been this shift away from just purely retail speculation and trading into what we call the institutionalization of digital assets. And so in 2024, BlackRock, as well as eight other major providers in the US, launched the first Bitcoin ETFs. That's expanded now to Ethereum. There's even XRP ETFs, Solana ETFs, a range of different institutional grade products where previously institutional capital was very difficult for it to buy and hold digital assets directly. They wanted to do it through a more regulated wrapper. And so in 2024, the amount of capital that flowed into the digital asset market from institutions, not retail, exceeded $100 billion. In 2025, even though the market went sideways to slightly down, the institutional capital coming in was $130 billion. And JP Morgan just put out a paper recently saying that they expect 2026 to have even more inflows into digital assets. And so whilst prices are volatile and they could be volatile for the 12 months ahead, we think that the long-term trajectory is still up and to the right because there's more capital looking to move into digital assets.
So more capital being invested, especially by the institutional investors, as you said. So it's positive outlook for the next 12 months, 3 years even. Again, we'll give you a pass. There's lots of economic factors and political factors at play there. You know, yeah, last April, um, when tariffs came out, the Aussie share market and the US share market plummeted backwards unexpectedly and recovered since. But yeah, there's lots of factors at play for digital assets and all other types of investments as well, given
Mm.
where the world's at today.
Yeah, couldn't agree more.
Um, so the all of these projected inflows by institutional investors is what makes crypto an attractive investment at the moment. Would you say that?
Um, I'd say it helps make it attractive in terms of the long-term stability and staying power of the asset class. If it was purely retail speculation on prices, which is what we saw from 2009 to call it 2017, it was a retail-driven market where we were coming from very, very low prices to the creation of the asset class, really. Um, what we've seen since then is obviously the rise of stable coins. So there's digital assets backed one for one with dollars or dollar equivalents. Um, a lot of capital is moving into digital assets, not just because they're here to speculate, but because they're building products and use cases on top of the blockchain. And so that does make digital assets attractive as an investment class. But coming back to not just the capital flows, but the fundamentals of what makes it attractive is that it's scarce. Well, again, I'll talk specifically to Bitcoin on this point, but Bitcoin being a scarce digital capital, like, you can accumulate a ton of gold if you've got enough money and store it somewhere in a vault. But when it comes time to wanting to realize those gains, sell it, capitalize, you've got to move that gold. And if you're a country or a company looking to store value, it's very difficult to transact in gold bars. You've got to actually verify that the gold is real. You've got to do chemical testing, scanning of the gold bars. We think that digital assets and Bitcoin in particular are fundamentally an improvement in terms of how money works today. And so there's fundamental drivers outside of just capital flows.
So it's yeah, attractive at the moment. I guess we've painted digital assets to be all nice and rosy, but there are some risks. Well, there's risks involved in all types of investing. There's certain risks involved when it comes to um, digital assets as well, um, around, the volatility involved, potentially data safety. Did you want to talk to data safety?
I'll talk about risk more broadly, and we can touch on
Yeah.
data. So I always like to take the big picture first, and then we can zoom in. So
Hmm.
within the cryptocurrency digital asset space, there's actually tens of millions of tokens. It used to be a few thousand, but new platforms like Pump.Fun allow people to spin up their own cryptocurrency for free, and you can try and flog it off. Nobody's going to really want to buy a token, and exchanges have listing processes now that you have to, go through in order to list a token for sale. But the point is that of the 60 million plus tokens that are in the digital asset space, 99.99% of those are worthless garbage. But that doesn't mean that the whole sector is garbage. So the key point being there, coming back to risk, is that you really got to understand the differences in what you're purchasing. Just because an asset's cheap or it's gone up in price a lot recently doesn't mean that it's not going to come crashing back down. And invariably, if you're investing in, say, outside of a top 10, top 20 digital asset by market cap, like it's got a market capitalization of a couple $1 million. That's very, very volatile, very, very risky to put capital into. You put something into a market cap like Bitcoin with $3 trillion and institutional capitals flowing into it, significantly less risky. Not that it's without its own risks, but it's important to understand the differences there within the asset class. Um, Double clicking on the data security point, there's been a lot of hacks and scams in crypto. And one of the main reasons that occurs is people will either they'll trust an exchange, and don't get me wrong, there's very reputable exchanges out there. But some exchanges have gone under, they have commingled client assets, they've invested client assets elsewhere. So you really got to do your due diligence on how your digital assets are custodied. And secondly, if you do self-custody, you never want to take a picture or digitally store your private keys, which is the equivalent of your password to your funds, you never want to put that, in a file on your computer because if your computer gets hacked, they'll take the keys, they've got access to your funds. And the other kind of main way people get into people's wallets is they will trick them into doing a screen share type call and request control of a PC. And in the background, they're kind of accessing all of your personal data files and access to your exchange wallets as well. So um, go with reputable exchanges, big brands, or companies that keep your assets secure through segregated custodians with insurance. So quick plug, but at BlockByte, we partner with the world's largest custodian called Fireblocks that offers insurance on the custody of client assets. So it's important to understand how to mitigate those risks.
100%. And there's risks, People get those types of phone calls that you're mentioning where it's from Microsoft or whoever to log in and click the link and whatnot. That's not just in the digital asset space. We get scam emails all the time. Hopefully, they get stopped by the firewalls of the world, but they trickle through. And yeah, you've got to have your wits about you. When, if it doesn't look legit, don't touch it until you verify it. But
So,
that's outside of the digital asset space. That's just in general. Um, so yeah, as you said, there are larger exchanges. The crypto.com one that had the Lakers or potentially one of the basketball stadium um, naming rights, and they went under. So there's
no, not crypto.com.
not
They haven't
crypto.com.
got. Yeah, they did. I think they purchased the naming rights for a major sports stadium in the US for like 100 million.
Mm,
But they are still like a profitable, large global entity. There was
apology.
FTX. Sorry.
Apologies to crypto.com. I just know that they had the naming rights and then must have been just rumors or speculation that they lost them because it went under, but apologies to them.
No, no. Sponsored by crypto.com. No, FTX was a major one that went under in 2022. And they were domiciled in the Bahamas. And so they were bypassing a lot of regulatory requirements that the US has, partly because crypto regulation was so toxic or non-friendly in the US back then. That's really shifted now. Um, and so we've got a US president, like him or hate him, that is making regulators come to the table when it comes to digital assets, and actually bringing it into light so that companies can, deal with the asset. They can help clients get into the asset class if they want to, rather than this regulatory gray zone where digital assets were for a while, where companies and advisors couldn't touch it. So you get dodgy companies coming into the space and they domicile overseas to bypass, gray regulations.
So there's also a bit of, yeah, regulatory risk involved. So when it comes to choosing the right asset and, before you do jump into the space, if you decide to get advice, make sure it's all above board and the like. But when you are selecting a digital asset for your clients, James, what are some red flags to look out for when you're selecting one, or how do you choose which is the right one to be in?
Yeah, I'll answer that in reverse. So to analyze different digital assets and where we might help clients allocate, we look at both macroeconomic drivers on the big picture side, but then we also look at what we call on-chain or bottom-up drivers, so looking at the different tokens individually themselves and their different properties and characteristics. On the macro side, digital assets trade very much in correlation with global liquidity. So more money circulating in the financial economy, and that happens when you've got lower interest rates in major economies or declining interest rates, and more central bank spending. It flushes the market with additional money, additional liquidity. It tends to rise all boats, and digital assets we've seen over time are one of the fastest rising boats. So we pay attention to liquidity factors on the macroeconomic side first. Secondly, we appraise digital assets individually. So some tokens, it's always easiest to use Bitcoin as the example, have got finite supply. They've got they've got programmed inflation into the network. So, for example, Bitcoin, not all 21 million coins have been released yet. So it's around 19.7 million Bitcoin in circulation. Every 4 years, the amount gets halved until we reach the full 21 million. The supply schedule is known. But then you've also got other tokens that inflate in perpetuity, or they've got very high rates of insider ownership. So that's one of the other critical factors. I think we're going to touch on this point on the meme coin section, but one of the key red flags to look out for in crypto is who's actually got most of the tokens that are being issued. Is it being centrally issued by one company? Is the network itself distributed, or does it run off of like one main server? In which case, if a set of computers go down in an Amazon warehouse, can that cryptocurrency go offline or be untransactable, which has actually happened several times, even on major tokens like Solana, for example. So yeah, we look at various different factors.
Various different factors taking into account all the economic factors and whatnot. Is there any, yeah, I guess what's the one red flag other than the meme coins? Is there any other big red flags that we should look out for?
Uh, I would probably say the number one most impactful driver on value. Well, inflation is a major impact on value, but in terms of the potential, going from something to completely zero, is you really want to understand um, if the actual token being issued has any adoption behind it in terms of transactions, users on the network. Sometimes, even if it's not a meme coin, it could be a well-intending company that's launched their own token, and there's a good story behind it. If if there's no visible economic activity happening on that token, I think you want to look at that first because a company can list a token at whatever price they want to start with, and then the market might determine if that's fair value or not. But we like to look at the on-chain data to see where is the capital flowing, is the blockchain being used by more people or less year on year, where is that in terms of the overall size of total users in the digital asset market. So those are some of the other key metrics to look at. But yeah, no, number one would be I think just inflation. If you buy a token and every year it's inflating by 3, 4, 500%, you're going to lose value because there's just that many more tokens in circulation.
Hmm. Thanks for giving us some insight into that. But on the meme coins, as we said off the top, you've got Dogecoin, Shiba Inu, Trump had his own coin, Iggy Azalea had her own coin, the Hawk Tour lady had her own coin. What, as you said, what are they? Yeah, what are they? Why do people even entertain it?
I don't know why people buy them. Well, on the one side, people buy meme coins because the prices can go up like violently fast for a short period of time generally. And for traders, if there's enough liquidity and excitement around something or a launch of a particular celebrity's token, and people will try and profit out of that. That's kind of the simple reason behind it. Other reasons you get, even major billionaires like the founder of the Tron blockchain, Justin Sun, he purchased tens of millions of dollars of Trump coin to, show some type of a how am I going to put it?
Allegiance.
Allegiance, yeah. And in a way it's kind of like lobbying, where you're kind of donating to a political figure by buying their token. And it's a bit dodgy really.
Sounds it. Sounds it.
Yeah. So yeah, there's money to be made. You can show that you're a true fan by being the number one Katy Perry token coin holder or Nicki Minaj coin holder, and you might get access to special events and privileges, and they get something that way. Um, but meme coins, generally speaking, are pretty horrific investment. Um, I don't know if you wanted me to go into some of the Trump coin. Um,
Yeah, go for it. The one that's I guess made the mainstream media, I would say, is Dogecoin because that was very big when it happened, and things happened within a week, and it was lots happening. But yeah, Trump coin's also an interesting one if you wanted to to explain a bit about that.
Yeah, so just jumping into like the more serious price mechanics, so there will be Trump fans on this podcast listening in, and again, putting aside any opinion on Trump as a person, whether you like him or don't, he and his family have issued a Trump token about I think it was 2 years ago now, and initially he issued 100 million tokens for sale to the general public, and there's 100 million issued that given to the developer team that they could sell to raise funds and fund a project with. So call it 200 million coins at launch. The other 80% of tokens are owned by the Trump organization. And so since the launch, it's gone from $200 million tokens, 200 million tokens, not dollars, 200 million tokens, to now there's over 500 million tokens. And by the end of, I think it's by the end of next year or 2028, there will be 1 billion Trump tokens in circulation. And so um, it's it's a good capital extraction technique, way of raising money very, very cheaply, if you've got, celebrity type presence. But again, it's generally a really poor investment. So you got to watch out for these things, even if you like the token that you're buying from.
Yeah, taking the person, Trump, Iggy Azalea, Katy Perry, taking the celebrity out of the investment decision is probably a is might be step one. But I guess that specifically Trump coin, you were saying a red flag before is inflation, and watch out for, you know, coins inflating its value by 10, 20, 30, 500% each year. Would you say that this specific case with this coin gone, it's gone from 200 million to 500 million to 1 billion, is a
Yeah.
prime example of that so-called red flag?
Yeah, and if we just look at the actual price since the Trump coin launch, when there was 200 million tokens, price is down by more than, I think it was 82, down by 82% last time I looked. And that kind of correlates with the 500% inflation that we've seen in the token itself. So absolutely. Yeah, it's generally not great for price when somebody issues 4 or 5 times more tokens of the same ones that you're holding. A little bit like if you have a company's share and then the company decides to dilute shareholders by tripling the amount of stock for sale.
Mhm. Cool. And that can happen with any one of these. That can happen with anything, but any one of these potential meme coins backed by anyone. Yeah. So thanks for joining me today again, James. Real insightful. Thanks for telling us which red flags to look out for and whatnot. You can find James at BlockByte Capital. But that's a wrap for today's episode of the Wealth Builder podcast. Thanks everyone to listening along as well. If you like today's episode, feel free to drop us a message or share it with someone you know who might find our conversation valuable. And I look forward to bringing you the next episode in a fortnight's time. Until then, have a great day.